of CarMarc Realty Group here in the Western Suburbs, blah, 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 the Western Suburbs of Illinois, specifically like Warrenville, Winfield, West Chicago, Illinois. And today, I wanted to talk about maybe some hidden inventory. Will the market shift a little bit? Are there pre foreclosures? Where are these pre foreclosures? What should we expect? How should you be thinking as a home owner? Should I be listing my home? Should I wait to list my home? Really, that is ultimately your decision. But let's talk. So I'm going to look at some data, and then I might share the data with you. And so right now, in our marketplace. So in our marketplace, if I look at the entire marketplace in Northern Illinois, which in our market, it's defined as like Champaign up to the Wisconsin border, all the way over to a place called Sterling, Illinois, over to Indiana. So when I look at this, and I'm looking at a tool that we use every day in our marketplace, and we have over 45,000 real estate agents. And as of today, let me tell you how many properties we have on the market. Let's look. So as of today, not under contract, and inventory is really down, 28,743. And this is residential, rentals, for sale, boat slips, parking spaces, attached, detached homes, multi-units. So residential properties, even a mobile home or land. So that's everything combined. So when I look at data, we have traditional homes, bank-owned homes, and short sales. In our entire marketplace, and I'm going to say the last 12 months, which is December 2020 through November 2021, we had 153,648 properties that sold in our area of the multiple listing service. Now, of that, and those are traditional homes. So we have a few more. Only 1,900 were bank owned or owned by the bank, and only 1,200 or close to 1,300 were short sales. So we don't have a lot of bank owned or short sales or pre foreclosures distressed deals. But back in 2013, and so I think I should share my screen with you so you can kind of see this. So I'm going to share my screen with you just for a second. So this is homes that were lender mediated back in 2013. So this is up 1 month, January, and this is 12 months. So this is actually a full calendar year, last 12 months, which would have been 2012. So when you look at this, and I'm just going to, let me zoom in a little bit, and I'll just pull a few random areas or zoom out a little bit. When you look at this, and let's see, Addison, like 56%, close to 56% of everything that closed was lender mediated. That means the bank was involved to sell it. Could have been a bank owned, could have been a pre-foreclosure, could have been a short sale. So the bank was involved. I mean, look at this. Calumet, is this Calumet Park? Yeah, it's almost 62%, almost 80% in Calumet City. And I mean, everything in Dixmoor was lender mediated. Elmwood Park, 65%. I grew up in a city called Broadview, Illinois. So like 61%, the lender was involved. Now today, and this is data based on November 2021. So this would have been, so this report would be December 2020 through November 2021. So last 12 months worth of data. Now, if I were to show you Calumet Park, look at the difference. So Calumet Park, only 9% was lender mediated. And in today's market, and this was the closed sales that I was talking about, if we were to specifically look at a specific city, and let's put in Calumet. Let's get rid of that. And let's see if we can get a city. So Calumet Park. If I were to look at this data, we can see, and let's look at traditional bank-owned short sale. Like most of the properties were traditional. So this is traditional. You had 6 bank-owned homes and 1 short sale. So we really aren't seeing bank-owned and pre-foreclosures or short sales. But what I want you to see is inventory in this area is down 10%. But let's look at a bigger city. And really quickly, let's see if I can find Naperville, because Naperville is a larger city like Aurora. So yeah, Naperville, there we go. So back in 2013, 21% was lender mediated. Today in Naperville, let's see. Naperville. We're getting there. I probably could have just done control. Hey, look, like not even a full percent. So when people are like, I'm just going to wait for the deal, I'm going to wait for the market to crash, it's not happening like it did in 2010, 11, 12, 13, and then eventually we started to go back up. So we don't see that anymore. But there's always a but, right? So let's put in Naperville. So this is Naperville, Illinois, and let's look at that breakdown. So in Naperville, last 12 months, we had traditional sales, 320, 2 bank owned by the bank, and 4 short sales. So this was nothing like 2013. I'm sorry, I said that wrong. Closed. Let me go back to closed. That was homes for sale. I'll come back to that in a second. So in Naperville, we had 3,225 properties that sold. It was like a regular seller, like you and me, selling our home. Bank wasn't involved. We had 17 bank owned and 12 short sales. So that's like nothing. If we look at inventory in Naperville is down almost 48%, 47.4% for a traditional home. So here's what I want you to see. Inventory is low. We really don't have any bank owned or short sales. Closing, so 17 and 12. Inventory is also low for a bank owned or short sale. But let's look at the overall median sales prices. So bank owned kind of skews the data. But if you look at the traditional sales, everything, traditional bank owned and short sales are all up. So the sales prices are up. But let's look at all of Naperville. So let's get rid of, let's just look at all of the data combined. And let's go back to 2008. So this is median sales prices up like almost 11% and way above, if you do the math, from January 2008. So this was like the bottom of the market. Then we went up, then we came back down. So if you look at this, if median sales prices are up almost 11% for all residential, inventory is down almost, 48.1%, and we're not seeing bank owned or short sales, should we be thinking about selling our homes? Now, I'll just pull another city. We'll pull Plainfield. Now, if you're watching this or you're watching the replay, and if you have questions, you can feel free, after this live is over, I'll put my contact information in. You can reach out. You can go to CarMarcRealty.com, or you can send me a direct message on social media, and I'll put my links on YouTube if you have a question about a specific city. So this is Plainfield. So let's look at sales prices for Plainfield. So up almost 17% compared to last year. But look at the difference between 2021 and 2008. So we are well above 2008 prices. Now they say the way this thing works is what goes up comes down. So it could still come down. Now homes for sale. Look at that. Inventory for all residential is down almost, 45.3%. When we see this, and let's change this back because I'm looking at a different graph. Let's look at traditional bank owned and short sale. So traditional sales, closed sales over 2,000, only 14 bank owned in the last 12 months, rolling calendar, and 15 short sales. So if this is so, and we're, everybody's like, I'm holding off, inventory is extremely low. Yes, the market needs your house. So I want you to think of a few things. If you do need to sell, contact a CarMarc Realty Group agent. You can contact me. I'll put you in contact with a real estate agent in your market. Here's what I want you to think about. If inventory is this low and you can now make more than you could have even last year, because a traditional home is selling for 16% more than last year. But let's just look at last month. Let's see, did it go? So 14%, last 3 months, 12%, last 6 months, so almost 16%. Now, every market is different. Like Kane, I think it's Kane or Kendall County inventory. Here, I'll show you what I'm here. Let's just look at it. Let's look at Kendall County because I think it's Kendall. So Kendall County, and let's look at homes for sale. Inventory is down almost, it's 52.2%, but sales prices are up 15.6%, but in November, 14.9. Now, if we look at just single family, median sales prices are up almost 21%. And then single family is down. And single family detached, so not attached, not a condo, not a townhouse, not a multi-unit, not a 2 to 4 unit, none of that. Just a detached single family home. Inventory is down almost 40%. But sales prices are up 21, pretty much 21%. And I'm looking at Kendall County. When I look to see what could be coming, so I have another tool that I'm looking at, and this is a lot of Northern Illinois, but let's really look at Northern Illinois. So I pulled something called distressed deals, a list pendens. That's when the bank has sent someone from their office, the attorney that's representing the bank has sent someone from the attorney's office to file the list pendens against someone that's not paying their mortgage. So in my market view, we have 870 properties where a list pendens was filed. That means that someone has not been paying their mortgage. Now, if I zoom out a little more, now we're up to 1,300. Now, if I switch this a little bit, and I'm going to switch this from list pendens to bank has taken the inventory in, and it may not have hit the market yet because I have off market selected. 2,658. So if you're someone that's on the fence, now, do I know when these are going to come out? Banks are strategic. Do they list foreclosed homes right out the gate? No, because we don't want to saturate the market with a bunch of bank-owned homes. But if you're someone that's not paying your mortgage, right? Or if you're someone that doesn't want to compete with someone that's not paying their mortgage because they're going to keep dropping the price to the point where the bank will accept until they get an offer because they could end up in a short sale because maybe they're upside down on their mortgage. Now I'm seeing that a lot of people aren't. So let me say it like this. If you're in pre-foreclosure and median sales are higher than a year ago or 2 years ago, you might still get a paycheck, right? But what if you're a homeowner that isn't in a distressed situation? Should you be listing your house while these properties are not on the market? So I really wanted to come and talk to you about what's happening in the marketplace. So I'm going to stop sharing for a second just to kind of have a conversation. So if you're a homeowner, if you are watching this because you're a real estate agent and you follow me, these are things or conversations we need to have with our clients. Don't wait to sell your home. Look at the data. If you want to have a conversation with me, I am Carrie Little, the managing broker of CarMarc Realty Group. And I would love to have a conversation. You can go to CarMarcRealty.com or click the link in the feed because I'm going to share that after this live. Thanks for joining me.